Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. After 7 consecutive days, the Australian dollar still remains on the back foot, hovering around 70 cents as renewed geopolitical tension and a hawkish Federal Reserve continue to support the US dollar. However, thin trading conditions also helped limit moves following the US holiday. Investors are now assessing the latest developments in the US-Iran peace negotiations while awaiting the release of this week's US PCE inflation data. Meanwhile, the RBA left rates unchanged last week at 4.35%, while Governor Bullock adopted a more balanced tone, stressing that any further tightening would depend on incoming data. Besides the US PCE, attention also looks to this week's key Australian CPI and labour force reports, which could determine the Aussie's next move. Technically, though, momentum remains fragile, as we can see here, and I still feel there is much pressure on the support area of 69.60. Now, I did say we could get a bounce from here, but there are stops building underneath and maybe finding support around 69.20 if breached before the next correction back towards 71 cents. Moving on to the euro, if I broaden this picture out a little bit, you can see we've got a hammer placed after rejecting the bottom side level of 113.6085, but we're not quite out of that zone. The trend is still bearish and the market still remains somewhat heavy. It is a key area that goes back towards July, or even if we go a little bit more, you can see the market pulls back towards this area seen in May, which could see stops triggered if breached and look down towards 112.6570 as the next key point. However, we're getting a little bit towards that oversold area, and let's see if this hammer can produce any demand and move away from 113.60 and look on towards 115 to 116. Turning to dollar yen, well, presently there is little to go on when it comes to any talk of intervention. Nevertheless, the market is still determined to push up and there is still a bull trap here, and I do anticipate one of these candles that could wipe out all these gains very soon. Interesting to see the market did bounce off the level of 131.60 for sterling as growing speculations that the UK PM could face mounting pressure over his leadership following a sharp decline in popularity, and also Andy Burnham's recent by-election victory. Along with that, lingering tensions in the Middle East and concerns over the UK fiscal outlook continue to cloud sentiment. Technicals are a little bit to the negative side, but the key level is at 131.4560. While intact, I do anticipate a rebound. Wrapping up with commodities, well, the market is still finding a bit of momentum here as it moves in towards that 4,200 mark. I still feel there is a somewhat momentum gain in here, and we could see a recovery back towards this trend line around 4,380 to 4,400. Nevertheless, all eyes will be on the PCE data this week, which could be the major catalyst for the next move. And wrapping up with oil, well, it's a little bit mixed. We've got a Dragonfly Doji, but still keeping neutral due to the uncertainty on the talks in Switzerland. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new week.